Welcome back. Today I'm gonna recap a little bit on the overall sentiment on all the markets, all the pairs that I actually posted on Twitter, and mainly I'm going to talk about the US30, which is the Dow Jones indices. So without any further delay, let's go into it. So on Twitter, I basically tweeted this on 20th, which is yesterday, after market, which is 4:30 in the evening. Overall, looking for bearish sentiment. Perhaps the 1 hour time frame we can't see on higher time frame, but when we zoom out on the 4 hour time frame, we can see much clearer structure that we are actually going lower for that. So for the first draw of liquidity, we were looking at 3 4 34 34,000, close to 34,300. That was taken out very quickly. And fast forward to today, this morning, I posted this as well. This was taken out, and on a 4 hour time frame, we're actually looking at a lower range, which is the entire daily range low. So that was still at 8 o'clock in the morning today. Again, fast forward to now, that low has been taken. So I'm gonna do a little bit of recap on this one. Why was I looking for bearish, even though we see a large push up here? A lot of people are actually looking for buy, but eventually they are taken out. So let's go back to the higher time frame. I can't deny that at this point of time, the monthly is still looking bullish. We have double break to the upside. A lot of liquidity at the bottom here. Double break to the upside. On weekly, we saw a lower high and lower low being formed. So right now, I'm still looking at. Let me. Give me a second here. Let me figure this out. Or maybe I should just open another one here. Sorry. Capital. Okay, they should look similar. So go back to Monday. We had a break to the upside and followed by another break to the upside again. So this give me indication that on a monthly outlook, we are looking at this high and this low previously, and a higher high form here, and a higher low form, another higher high. So this give me a indication that price is coming back to the premium, or likelihood with the double break on the monthly, we should be able to see this high to be taken out eventually. But we're not going to chase for that. We're not going to target any long here and take profit at this level, no, because we're doing here is actually on an intraday basis. I tend to trade less on indices right now because of spread on the forex account that I have. I mainly focus on the USD JPY or the Euro USD, etc. But sometimes I still look at the sentiment on indices just to get an idea. So on weekly wise, this is the range that we're looking at. If you want to be um, conservative a little bit, this is still the most recent structure, most recent low and high. By marking, as I mentioned in the previous videos, if you want to look back at some of the videos that I put up maybe a few days ago or maybe a week ago, I started using all this markup in my charting to, even though for lower time frame, I use this very often right now to mark up the outlook that I have, just to give me an idea on where is the recent range, so that I can see much clearer in a way where is the low and where is the high. So we can actually see that there are a lot of liquidity at the bottom here. But if we were to short again, I'm not going to short until this level. I'm going to take level by level and take it day by day. So do not have to rush. Do not have to rush. On a weekly time frame, we see a break here. So I'm going to use this as the weekly supply, or the IC, or whatever you call it, like a drop base drop, or the 3 bar pattern that you want to look at. So I'm going to mark this out as the weekly. So why I put it as IC is because IC stands for the institution candle, which is the large push up candle before the downside displacement, or the last sell candle before the large buy side displacement. So for now, this is the latest candle. You can see that the price come back to this IC and immediately broke down. So for this one itself, um, this will be the daily IC, last push up candle, buy candle before the breakdown. As you can see that the first tap into the zone and followed by the second tap, that will be the mitigation and the liquidation. So some people use the tap and sweep, but it's just kind of like a terminology that you use. It's up to you. So um, if I were to mark up this range here, which is this one, and followed by, so we had a low, push up again. We didn't form a higher high. So this was a higher low internally, and followed by a breakdown, which is the weekly breakdown to the downside. So this is a lower low, lower high, and at the meantime, for here, I will look for a possible reversal down, break back to the downside, which is this range here. So if you're talking about the most recent structure, I would look at this range if you want to. So price come back to premium, um, break down to the downside, and come back up again, mitigate and liquidate again. So at this point of time, I would look at the 4 hour time frame. So yeah, we have to focus on the price action as well as the candle behavior. That is very important, very critical when you come to read the price action. When price is going into the zone that we want, like the P and POI, any weak is a weak reaction. Any candle closure is a strong reaction. So you can say that it's a strong reaction, but because of news, I probably believe so. News bring the price down to the downside, and eventually broke down to the downside here. That was the most recent low. If you want to mark this out, so price make a higher high and followed by a lower low and higher high again. So This give me another indication on the lower time frame, which the price is continuing the bearish sentiment. So price will likely come back, take out this low, this one, and eventually the range low. So the first TP that I actually mark out in the on Twitter is this low because it's they are all equal lows plus ultimately this range low. Again, I have to emphasize we do not have to focus anything at the bottom because it usually take a few days for price to come back to take out all this liquidity, but we just have to focus on what we can see at this point of time. So what we saw here is basically the imbalance, come back to imbalance, take out all the buy side liquidity, okay, and without a closure on H4. And because if you were to mark out the high and low, this is not the high. This is not the high that made the new low. This was the high that made the new low. If you want to inverse it for a more visible kind of view, you can see that this was the low and high. Come back down. This low is still holding. Eventually make a new high here. So um, I would not consider that this is the new high. So at this point of time, I would look for a rate and followed by a breakdown. So if you are using the H4 rate, you can possibly go down to M15 on a displacement with M15, and then you can look for a short at this scenario. So for me, there are a lot of a lot of sell side liquidity form, a lot of trend lines being formed over here. Um, People will take longs back to the high, long back to the high, but eventually price be taken out. You can use the most recent boss. So I would probably use the IC as the whole entry. Or you also can use this candle here, up to you. I personally do not like the I I would not say that I don't like the candle before candle of the displacement candle, but I would I preferably choose the IC because that will cover the whole range in terms of like the in terms of stop loss wise is wider. In terms of risk to reward is lower, but it still gives me a significant profits that I want to. So you can take a shot here. Depends on timing. This is at the 2:30, which is the afternoon session. Um, Up to you. If this is your preferred session, you can do so. If not, you might want to skip it because it's close to the end of the session. So if I would zoom in to M5, where is 4 o'clock? I would use this as the indication for me to actually close my trade if I were to trade. And you can also see that there are sorry there are a lot of sell side liquidity that we can target, right? So it's still a decent 6R with the stop loss being wider a little bit if you consider the spread, but still a decent 6R if you were to risk $500 on a 100,000 account. That's a 0.5% risk. still decent risk, and you will be getting back the profit of like $3,000. So that's still fine. Um, so on a higher time frame, the price broke down during the London, and before, I think right at 9:30, 9:45, price came back up, liquidate all this high without a closure again. This is very obvious. So the high here still holding. This low here is the most recent low, which is your TP level for the low hanging fruit. If you want, that will be a TP1, and the TP2 or final TP, you can target the range low for this one because there's no more imbalance at the downside. Basically, the next draw of liquidity will be this range low. So if you want to, you can basically short here. If not, if you were to short here, you can use the OTE. If not, you can wait for another break to the downside, which is this candle, because we had a break again. Price came back up to the zone. If you were to use this as a stop loss, you will get stop up because this will be the mitigation and another second tap to liquidate the early shots, and then price came to our TP. So for me, sometimes I use two options basically. One, I use this target the same thing. So I would not care about the mitigation and liquidation. If I'm so sure about the price going to the downside, I will use this. If not, if I want to, sometimes I'm greedy. You should not be. You can actually use the, I don't know, they call it like the turtle soup. You can place the entry right at the mitigation, meaning the first tap into the zone. You wait for the second tap, and price goes straight to your TP. Usually, you will get a higher RNR because the entry will be a little bit higher into the supply or lower into the demand. It's up to you. So yeah, I think that's all I need to cover for today. It's obviously very bearish at this point of time. I mean, from the early week price, where was the early week? Yeah, so price started somewhere around here, came back up to liquidate again and break down with the news, and you can play the continuous. So this is the current view. I would not long anything or short anything because the liquidity has been taken out. If you want to short, sometimes it might be a little bit too late. A lot of people see this low being broken, and they will continue to short it, and eventually they will become the liquidity. If you want to play along, you need to actually focus on the break to the upside. Sometimes you use the double break. Double break meaning that you actually see a higher low and higher high form, and another higher low being formed again, meaning that the first higher low is holding well. And yeah, I think that's about it. If you have any question, please feel free to drop in the comment. I do not have any fancy kind of videos or shorts, but I'm just here to put out some contents that I think it might help you. Um, yeah, I think that's all for me. I can also go into a few more pair if you want to. Yeah, same for the Euro USD daily bearish. We had a displacement to the downside, and price came back up to the imbalance, the POI or whatever you want to call it. Come back here, leaving a lot of sell side liquidity, a lot of trend line. So eventually it was broken to the downside. If you want to catch, you can catch a continuation to the range low for a TP. As you can see, that price come back down to take out this low and immediately followed by some break to the upside again. So right now internally, we are still bearish because we form a new low, a new lower high and lower low. But internally, we are looking at some kind of reversal like what we saw back here, making higher low, higher high, sorry, higher high, higher low, higher high again. And eventually we might see some kind of pullback to the premium again, a lot of imbalance, the IC, the supply, and we'll see how it goes here. If price come back up and plunge towards the POI and eventually take out this high, we will see a bigger kind of pullback to the upside. Um, and not speaking of this one, the external liquidity has also been taken out. So we might really want to be careful when we want to short further. But overall time frame, I think we're still bearish. Um, USD JPY. This is bullish. I've been trading this a lot. Not a lot. Like this week, I've traded USD JPY for twice. Decent win. I think I got like 2 out of 2 trades win. And I think overall I got about 5R overall. I also put up some videos and shorts in the YouTube. You can take a look at that. If you want me to cover a little bit on the explanation, the full detailed explanation, you can drop in the comments and let me know. I can go through that again. But for this video, I will not cover so much about it because I just want to focus on the US30. I try to keep this thing short. So for USD JPY, high time frame is still bullish, but by looking at the most recent daily structure, I think we are looking at this high and low within this daily range. Looks to me that price is trying to pull back to the discount. There are a lot of sell side liquidity over here. So I think internally it also formed a lower low. I want to see a lower high being formed here after taking out all this liquidity. If we can, if price is showing that kind of structure, we can target a short back down to this internal range low, and eventually the discount range as well as the sell side liquidity. This is looking clean. This is very clean. On gold, XAU, um, on higher time frame monthly, I think we are still bullish for now. At least for now, I think there are a lot of liquidity at the upside, a lot of equal highs, and but weekly we're still bearish. I saw a break to the downside. Failed to form a weekly higher high. It formed a lower high. So this is the more recent structure, or you can use this as well. It depends on how you see it. I would just want to focus on this one. There is a few options, few scenario that I'm looking at. One, this structure gives me a displacement to the upside. Maybe we can still look for this kind of reversal and take out this high to actually form a mitigation and a liquidation within this bearish range. If it displays over it, I might be able to look for long again. If it only rate a high and it come back down, sorry, rate the high and come back down with a displacement to the downside, I will look for short again. So it depends. To me, it's still bearish at the moment. I do not want to predict anything, but I will look for intraday session trading. Yeah, I think mainly I will just need to focus on a few, cover a few sentiment, few pairs for you. Typically, the indices, if you want me to go through Nasdaq or the S&P 500 or the Dow Jones, can you can drop in the comments and let me know. I can go through a full detailed one. If not, I will just give a overall high time frame sentiment on a few pairs that I actually look at. Typically, the USD JPY, Gold XAU, Euro USD, and the US30. And I think that's about it. Appreciate anyone who is watching this video. If you have any comments, please feel free to let me know, and please subscribe to me and give me a like if you like this kind of video.